Chandan that you could be keeping on your radar. With that, Chandan, hold that thought. We'll come back and take up more viewer queries with you. But in the meantime, I'm also joined by Aditya Khemka, who's the fund manager at InCred Asset Management on the show. Great to have you on the show, Aditya. First of all, just to talk to you about the pharma pack, how worried should one be of all the US FDA action on pharma companies? The likes of Sun Pharma, whose Dadra unit has come under US FDA lens. You have Cipla's Goa unit as well, awaiting a resolution. As one turns towards defensive, how big an overhang will regulatory action continue to be for pharma?
Good morning and thanks for having me, Nandita, on the show. So look, US FDA actions are not new now. I mean, we have been seeing US FDA actions for most of these large pharma companies for the past decade. And one must say that they have done well to diversify in terms of, the number of plants that they are reliant on when it comes to a given ANDA or at least high ticket ANDAs. So I think from the earlier days, 5 years, 10 years earlier, when these US FDA actions would have resulted in significant earning downgrades for most of these large pharma companies, today the impact is relatively lesser. However, what is disheartening is that we just still keep getting into the US FDA problems, which, one would have thought that after 10, 12 years of scrutiny from US FDA, the industry could have caught up pace. But I'm told that it's a moving goalpost. FDA keeps changing regulations, keeps adding problems. So definitely, it is disheartening to see the fact that they still get into the US FDA problems. But having said that, they've done well to diversify their ANDA basket into multiple facilities, which reduces the earnings impact of US FDA actions on a given facility.
Right. Just want to get in your thoughts on the specialty chemical space as well. Since this is one pocket that's yet to fire up, and we get a lot of queries as to whether one should now look at specialty chemicals given the kind of valuation comfort that they offer in terms of in comparison with the other pockets in the market. Should one look at nibbling into some of these specialty chemical names now? Do you think the time is right for that?
So there are two things I would like to highlight here. One, I think the word specialty chemical is fairly abused in the marketplace. Not all chemicals are specialty chemicals, but most of the chemical companies like to call themselves specialty chemical, whereas in our view and understanding, many of them end up just being bulk chemical companies, nothing specialty about it. Having said that, within specialty chemical space, we prefer companies that are more doing business for larger FMCG or healthcare or industrial giants globally and have a sort of a captive customer base. So CDMO within the specialty chemical space is what we really like. What we do not like is, when companies essentially manufacture bulk chemicals and call them specialty chemicals. So one has to be very bottom up in the specialty chemical space. You have to decipher whether a given stock is specialty chemical or just bulk chemical, hiding under the name of a specialty chemical. And then you have to decide, what valuation you're okay to buy it at. Just to remind our viewers, I think 10 years back, most chemical names are trading at 8 to 12 times PE multiples, and that was really cheap. 2 years back, most of these were trading at 40, 50, 60 PE multiple, and people thought that was also cheap. Today, it is trading at 25, 35 type of range PE multiples, and people are still thinking it's cheap. So, it's not a blanket statement. I mean, you have to understand which company you are buying, what is the product portfolio, how sticky is the product portfolio, and how high ROE can the company maintain or sustainably over a longer term. And then you decide what multiple you buy them at.
Okay. Going forward, Aditya, how should one really play the healthcare theme? Would you suggest looking at hospitals, diagnostics, or would you say that, the large cap generic names like Cipla, Dr. Reddy's, Sun Pharma are the safer bets?
So look, I think in our InCred healthcare portfolio, I can tell you what we're doing. So in there, our largest overweight today is diagnostics. So we hold about 24% equity in diagnostics in our portfolio versus 2.5% weight in the index. So you can gauge the amount of overweight we have on diagnostics. Second most bullish, we are on branded generics, not the unbranded generic companies, but the branded generic companies for whom the largest business is the India business, where, capital allocation is not a problem and, OPEX is higher than CAPEX, and hence your margins are high and your balance sheet is lighter. So your ROE tends to be high in that business. And third largest bucket where we are bullish is on the API side, where again we are on the CDMO companies. So be it chemical API, be it a pharma API, be it whatever. So on the CDMO side we are bullish. And then we are equal weight on hospitals because we feel hospitals, many of the hospitals have just gone far ahead of their intrinsic value. So I think that's where investors need to be cautious. You again need to do a bottom up on hospitals. The right ratio to look at a hospital is EV to OCF, enterprise value divided by operating cash flow. Now, if you look at that ratio, certain hospitals are trading at 70-80 times, which is basically 70-80 cash PE if you would want to call it that. And certain hospitals are trading at 20 times. And there's not a significant difference in the business models of the hospitals that we are talking about. So, you're better off buying the cheaper ones because you're getting a similar ROE and growth profile as the more expensive ones at a much cheaper valuation. And last but not the least, we are very, very underweight on the unbranded generic space. Why? Because we believe one-time product opportunities like Revlimid, Spiriva, and some other products which are in shortages today are giving them extraordinary profitability, which is not sustainable. So it may be there for a year or two, but after that, these earnings will go away, and these companies will probably report decline in earnings.
In terms of expectation from the first quarter numbers, would you say that pricing pressure in the US would be a thing of the past for pharma, or do you think it's still a work in progress?
So no, if you look at it, most pharma companies, even for the past 2 years, have been talking about pricing pressure. It's just that they got a Revlimid or a Spiriva to hide that pricing pressure because the overall US revenue is disclosed. These pharma companies don't disclose the revenue from their highest product or their largest product, so you don't know how much they are making in a Spiriva or a Revlimid. And hence you get to see the entire US numbers, which are looking good, for the last 2 years. But that, in my opinion, is driven by these one-time large product opportunities, which are not sustainable and will not recur in future. So I think pricing pressure will be talked about again in this quarter because pharma companies tend to tell you that the 5 to 6% pricing erosion in US is normal. My point is, even though if it is normal, it will always be a drag on the profitability because if your price keeps declining, you need to produce more volumes to have the same revenue, which means on a lower absolute EBITDA, you will have a higher asset base, which means your ROE will keep coming down. So, that is the reason why we don't like the unbranded generic business model. But we expect the pharma companies to talk about pricing pressure in this quarter as well.
Okay, pricing pressure will persist and pharma companies may speak about that this quarter itself. But couple of more questions. I know you don't really talk stock specific, but just want to get in your thoughts on Aurobindo Pharma in particular because it will be considering its maiden buyback today, right? In terms of the prospects from here, the stock has rallied somewhere around 80% over the last 1 year. Do you see more valuation headroom for this stock?
So look, on the unbranded generic side, we feel that the right valuation multiple can be anywhere between 8 to 12 times PE multiple. The name that you refer to, I don't exactly remember what valuation they are trading at, but I think 8 to 12 PE is the right PE to value some of these unbranded generic business models. And if the stock is below that, then it may be a good trade to get into. Remember, unbranded generic stocks can mostly be trades and not structural buys because the business is so volatile, the pricing pressure is so volatile, the one-off product opportunities keep coming and going. So you have to be very, very clear about your entry and exit points. And they have probably got a balance sheet which is slightly levered. I think now they have paid most of the debt down, but I think some of the debt is still there. So one has to be cognizant of that as well. But a buyback, etc., is definitely a good move for any company, because if you are returning capital to shareholders, which also basically indicates that you are probably not finding enough new opportunities to deploy capital. And then one has to then therefore think about what kind of growth these companies can deliver if they're willing to return capital and not building more capacity. Because unbranded generic is a game of capacity. You can only keep growing till you keep expanding capacity. Otherwise, your growth stops. So, you have to take all of these things into consideration and then take a call. So, I wouldn't be able to give you the answer for a window.
Right.
Simply because we don't track it that closely.
All right. I appreciate the fact that you still spoke about the stock. But, lastly, any particular expectations or on the wish list from the FM in the budget, R&D support, policy support, these are some of the things that pharma industry per se, is seeking from FM. On your wish list, is there anything in particular? You guys must have had internal conversations about what one can expect from budget. Anything that you would like to share with us?
So I would like to more focus on the National Health Mission budget, right? The allocation to the National Health Mission, digital health. Because, the space that we are bullish on, which is healthcare, which is basically diagnostic, hospital, CDMO, etc., they keep getting some allocations from the central government in terms of the allocation from the National Health Mission. So I would like to see the government spend more on healthcare for the poor, on affordable healthcare, and try to subsidize that segment through government agencies or insurance plans or whatever it is, because that will improve the accessibility and affordability of healthcare for the masses, and it will also improve the volume growth and the occupancy rates for the companies that we own. So I think do good, be good kind of situation. So if they allocate higher sort of number for the healthcare for poor, then the kind of stocks that we own, they will benefit from such an allocation.
All right, that's the kind of expectation of wish list that Aditya has from the FM. But Aditya, on that note, thanks a lot for taking our time and sharing your thoughts with us. It was a pleasure chatting with you, and I hope to connect with you post, the numbers from pharma giants like Cipla, Dr. Reddy's, Sun Pharma as well, and getting your thoughts on what you make of their quarterly report cards. Thank you.
Sure.
Well, with that, let's go back to Chandan, who's been waiting by. Chandan, before I come to queries, I want to get in your thoughts on a Just Dial. The stock is up 15%. Good set of numbers. In fact, margins have almost doubled, if you see, on a YOY basis, 28.7% vis-a-vis 14.8%. What would you do with a Just Dial now? Would you look at booking profits?
Just Dial, after Nandita, Just Dial has seen a decent run-up recently and set for a major breakout after a low monthly consolidation. I believe this is going to be the highest level since December 2015. It's almost 9-10 years long consolidation breakout. And I believe a decisive hold above 1120 can take it further up by 20-30%. So I think after a long time, this breakout is happening, which is turning the major trend to positive. So there is a reason that we can hold the position also with support of 1120, 1130. And this stock has potential to now scale up towards 1350 to 1500 plus zone soon.
Okay, that's the view on a Just Dial. But let's take up some queries then that are trickling in this morning. I want to get this query on tea stocks addressed, because of course it's rainy season and tea is my favorite beverage any which ways. So we got a query from Srivardhan Gupta, wants to know your thoughts on McLeod Russell. He wants to know whether, I don't know whether he holds the stock or not. He wants to know your thoughts on what should be done with this stock. Tea stocks have been in focus, shortage and, rising raw material prices. These have kept the stocks buoyant. One of the sessions last week, some of these tea stocks were buzzing. But if you look at the last 5-day returns on a McLeod, it's down somewhere around 10% or thereabouts. So, how should one really navigate tea stocks now? Would you advise taking positions now?
So talking about your favorite beverages, some sort of consolidation is there. I don't see major momentum. But yes, range bound bias is clearly visible. It is multiple support near 26 with hurdle at 34, 35. So I think it's likely to be in that range. And especially in last 5 days, we have seen a corrective move from 35.50 to below 30 level. So let it correct and find the major support, then only I think some sort of recovery could be there in the counter.
Okay, that's the view on McLeod Russell and the tea stocks, on the whole. But I want to take up a query on Castrol India. This stock has done very well in the last 1 month. In fact, the company has forayed into lubricants for cooling of data centers. That is the next big thing. So the stock has been in focus, and we have a query coming in from Dheeraj Sharma on this particular stock. Wants to know your thoughts on Castrol India for the long term. After such a good move, would you advise buy on dips?
Yeah, so Castrol has recently given a breakout from its pole and flake pattern, and after that it rallied, but some sort of consolidation we have noticed due to the market pressure. I believe any decline towards 250 could be bought, but an upside move towards 275 to 300.
Okay, that's the view. I hope that answers your query on Castrol India. But the other query that I'm getting is on an NMDC. Hasn't really been able to fire up in the last 1 month. At least it has done well in the last 6 months, but the momentum has fizzled out. In the last 1 month, we've seen negative returns of somewhere around 8% or thereabouts. Aju Onion wants to know your thoughts on this stock. Buy, sell or hold? What's the call here?
So talking about NMDC, I think hold. It might see some corrective move before starting the next leg of rally. So as of now, given the price structure on the daily and the weekly scale, it can see some profit booking decline, which can lead the counter to us to 25 to 230.
Okay, that's the view on an NMDC. But very quickly, a query on Paytm. This one is coming from Mrinal Banerjee. Wants to know whether it should be held, or would you advise booking losses if they've bought it at higher levels, or I mean, how would you advise them to hold or navigate this stock?
So advice to Manal is that Paytm has been making lower top, lower bottom on the big time frame. It has seen a corrective move in last 3-4 years, all the way from 1955 to 300. However, the good part is recently we have seen decent recovery, but again the follow is missing. If it goes above 500, then on the setup and sentiment could change. Otherwise, it can retest 435 to 440 zone. So if you are ready to bear that kind of decline to again form the positive pattern, then only you can hold. So 430, 425 is the major support for the counter.
Okay, those are the levels. 430 major support for Paytm. But one query on alkyl amines from Maheshwar Bhanu. He wants to know, is it worth holding for an exit target of 2500 rupees in the near and medium term? Stock has gone nowhere in the last 1 month, almost just 2-3% higher. Of course, chemical stocks have not seen such a great run. In the last 6 months, the stock is down 14%. Would you advise a 2500 kind of target, play with that kind of target in mind?
I think better to exit because the structure is weak and we are not much positive on the selective chemical name, where trend is negative on the short term and the medium term point of view. So suggestion is try to exit on any small bounce.
Okay, exit on small bounce. That's the advice here. But just a last query for the day. This one is coming in on IREDA from Kishore Pujari. Now this stock has been a high flyer, since listing. It has already been a multi-bagger, right? So wait for more profits or take profits off the table?
If you're getting profit, then you can exit and then again try to enter once it goes to 210, 220. So if you're getting profit, you can book and try to accumulate again at lower levels. Overall positional point of view is positive, but I believe any decline could be bought. Major support is near 180, can accumulate near 210, 220 for positional target of 300, 350.
Okay. Also, lastly, want to get your thoughts on a Bajaj Auto. UBS has a sell call on this stock. Stop Nifty loser right now. Any support level that you will be watching out for here? Should one average if they already hold Bajaj Auto?
I think let it consolidate. The good part is now the stock is near to major support of 50-day exponential moving average. So let it come near 9200 to 9050, 9200 to 9250 for any kind of accumulation in the counter.
Okay, that's the view on Bajaj Auto then. But with that, I think we've come to the end of the query segment. Chandan, always a pleasure interacting with you. Look forward to our next conversation. We also have the budget next week. So look forward to interacting with you on that occasion as well.
Have a great night.
Thank you. Thanks a lot. Well, with that, let's take a look at what the markets are doing at the current juncture. Well, we are weak. Of course, it is a subdued day. 24,550 has been taken out. The Nifty is down somewhere around 80 points. Sensex down almost 300 points. Mid and small cap indices are witnessing deeper cuts because the mid cap index has slipped by 1.5% as we speak. The Nifty Bank Index trading with mild losses. The texture of the markets, of course, remains on the lower side today. We'll see how things really pan out, if we can see some bit of reversal in the last half hour of trade or not. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. You have a great day, and come back and join us on Closing Bell at 3:30 p.m. Have a great trading day and stay tuned to Money Control for all your other news and updates. Thank you.